Most of what we built has been built ourselves from scratch, right? We started off focusing on a very narrow use case, which was payment infrastructure tied to card programs and card payment networks. And then we've expanded from there. So like we've added additional capabilities on like the credit side. We've added more cross-chain capabilities. So everything that we designed was specifically made with the idea that like what happens post regulatory clarity, right? Like everything we've been building has been indexed on being the market leader the day after regulatory clarity comes in. Let's make sure that we're using it and stress testing it and growing it with real money so that we have a track record that we can point to as a solution that works and has been tested. Everything that we've done here has been coming from looking at this market and opportunity from a institutional lens.
This is Money Code. It's the show where we decode stablecoins and programmable money so that you can better prepare for an on-chain future. I'm Chuk, Okpalugo, your host and author of Stablecoin Blueprint, and I'm joined by my co-host here, Raj Parekh, head of payments and stablecoins at Monad. How are you doing, Raj?
I'm pumped. Got a good guest here today.
Super excited today because we're joined by Farooq Malik, co-founder and CEO of Rain and fellow connoisseur of the New York ramen scene. You should hit us up for recommendations. And actually, whilst we're here, if anyone has good ramen recommendations outside New York, I'm in London right now. I've heard Bone Daddies is good. Keen to get all those recommendations and hear from you. So that's another bit of homework for folks to do. Okay, before we dive in, a quick note. The views and opinions of the speakers are their own and may not represent their companies. Nothing we discuss today constitutes investment advice or any other form of advice. Money Code is brought to you by Stablecoin Media and powered by BVNK. Let's dive in. I guess another quick disclaimer, Raj, you and Farooq go way back. Actually, there's a bit of a story there. You want to tell us some more?
Yeah, I mean, the early days, I guess this dates back like almost a couple years ago when I was, building Portal more directly. I came across this team called Rain and fell in love with the concept of adding stablecoins to cards. And so quick disclaimer, almost like a small early angel investor too, but Farooq, it's excited to have you on the pod officially, man. And hard to believe like being in the trenches in the stablecoin world for as long as we've had so far too.
Yeah, absolutely. Great to be here. Thank you both for inviting me and giving me the opportunity to join you both.
Cool. Well, maybe we can just start from the beginning. So like, just walk us through like maybe your quick background. What is Rain? And then, what did this whole idea of stablecoins tied to, what you guys are building today even emerge from as well?
Yeah, I mean, Rain is a stablecoin infrastructure player focused on adding utility to digital money globally, providing access to seamless interoperability between multiple blockchains, dollar balances, spendable globally at scale. And we started the company in 2021. We have been growing ever since, really starting to focus on the expansion of the stablecoin ecosystem and the utility for stablecoins more broadly for both digital asset native applications, but also as a replacement for traditional financial services and enabling different types of use cases for a variety of users and platforms around the world.
And maybe you could describe just like the quick evolution of Rain too. So for folks that don't know, like, how did Rain start? And then, you guys were one of the early, I think, movers of the card issuing space tied to stablecoins. But like, where did that idea even come from?
Yeah, so Rain, we started in 2021 focusing on the intersection of like fundraising and like early stage companies. And as we were exploring that space, some of the folks we were interviewing were asking, hey, do you know how we can raise money in stablecoins? And we ended up building a proof of concept for that. And the first transaction happened kind of, internationally between an investor in the United States and a company internationally. And it just instantly transmitted value between one person and another. And it was on a safe note. And we were just thinking, hey, this is a really different type of use case. Like the money has been already transmitted. The person has already received it. They had visibility on the transaction as that was in flight. And we just realized, hey, the future of money is actually already here. It's just being called stable coins or digital currency or distributed ledger or blockchain or whatever it was. And it really made us aware of the fact that the world has already started changing. And it really led us down this rabbit hole of realizing, hey, central banks everywhere are thinking about stable coins and digital distributed ledger technology and all this other stuff as a replacement or the next phase of what money technology will look like. And if we get started building all of the interoperability and infrastructure today, we will be in a position to actually take advantage of this growth over time. And so that's really what got us interested in the space. And we started building sort of the first primitive solution for Rain, which was on top of, which was providing access to stablecoin spending for B2B use cases, largely focused on teams that were using USDC or USDT or other stablecoins as like their native currency, and giving them the ability to actually use that for corporate travel or equipment or web hosting or domain names and things like that. And so that was the first real use case for the infrastructure that we built at Rain. And it was just because that industry was already there. They were already using stablecoins as their traditional currency of business. And it was already $100 billion plus of corporate treasuries that were on chain of people that had been building in this ecosystem. And from there, we started building a relationship and our reputation being a service provider for this industry vertical. And then as the market started evolving through the bear market, where, you know, speculative use cases kind of died down and more traditional use cases actually started emerging, like remittances, B2B payments, things like that. And that gave us the opportunity to kind of leverage the fact that we already had relationships with a variety of these foundations and protocols, and then become the service provider for them as they were thinking about, hey, how do we actually go out of this speculative market and focus more on payments use cases for consumers and businesses around the world? And because we'd already been there, we'd already been building the infrastructure along the way, we'd already moved people's money, we'd already been on multiple different blockchains, we became kind of that default solution that a lot of folks came to and said, hey, we trust you already for our company money. We would trust you to move our clients' money or support, our consumer use case. And that really helped us break into kind of what we do today.
And I think it's always interesting seeing how these use cases emerge. The early stages of any startup is an exploratory journey where you're responding to customers, they have different needs, and you're trying to find where they overlap and where they look the same and who your ICP is. And I think it's interesting how in the crypto landscape, you have many companies who have existed initially potentially for speculation, right? Or investment or other kind of non-payment use cases. But these are businesses still. And as businesses, they have treasury, they have staff, they have expenses, and they need to interact with the traditional world. And so the existence of speculation actually has driven some of the more traditional financial needs of these companies. And you need companies like Rain to help bridge the gap. And so I think that's a really interesting kind of almost irony of the people who say there's no use cases in crypto other than speculation. But that is the initial wedge that begins this flow into, okay, well, what other financial services do these firms need? And I know we can talk about cards. That's a massive one. And we can also talk about how that expands the utility of stablecoins from just something that you can all use on chain to now interacting with hundreds of millions of merchants.
Absolutely. And speculation has really driven a lot of different things around the world, right? Like discovering the new world was a speculative endeavor. Sailing around the oceans and all these East India companies or like the West Indies companies and all these other things were all speculative in nature. And so if you think about like modern society, a lot of it was driven by speculation. And, even railroads, people built railroads before they figured out what to do with them, right? They were just like, oh, building railroads is a way to make money. And then a bunch of people were like, oh, this like we can build industries around all this stuff and create wealth and things like that. So like speculation isn't necessarily bad. It's just always been kind of that first piece of a lot of global development around the world, right?
And I mean, just to touch on that, I mean, the original, during like the gold rush, they were called the 49ers. Then you have like the Wildcat banks, and it was called the Wildcatters back then. And now we call them degens. And so to your point, Farooq, speculation has actually breeded new markets. We just call them different names back in history, but now it's called degen and sometimes has, a negative connotation to it. But it is actually the original foundation for new markets. That's what we're saying with, with crypto and blockchains and stablecoins kind of come about as well.
I love that. That's how they're going to look at history in 50 years. They'll say, yeah, it was initially the 49ers, the Wildcats, and the degens of the 2010s and the 2020s. It makes a lot of sense, and it drives a lot of the adoption. And being on the infrastructure side and listening to the customers and trying to figure out what they do and what they need and building all this up from scratch, it's clear that this card spend element has just been such a key utility and has grown so rapidly. And I think it's one of the fastest kind of growing elements of infra for obvious reasons. You're able to create all this utility. But from the other side, the perspective of your customer, like how are your infrastructure type or the financial services thinking about incorporating these services? So for example, if I'm out in the market and building a consumer neobank or a B2B or SMB financial services and I need an expense card, what do I need to think about when thinking through choosing a kind of card, stablecoin linked card products? Like how do I go about that selection process? How much money can I make from interchange? Kind of let's talk through that.
A lot of that depends on the program structure, right? Who you're actually working with. I think with a lot of these industry verticals, there's different use cases, right? Like if you have a program which is based specifically on spend, you want to start focusing on, okay, how do I actually use the highest interchange product available? If you're focusing on, monetizing the customer in a lot of different ways, cards are a real interesting way to actually bridge back into existing payment rails so that your user doesn't have to feel the friction of being in stablecoins. I think the challenge with stablecoin most broadly is that it is a different type of financial rail. It is interfacing with money in a different way than you would normally. And not having the ability to spend or transfer, right, is going to impact the trust that you'll be able to engender with your consumer. And so payment cards are really a way to make people feel the reality that, hey, this is money and I can use it the way that I would normally expect to use money. Customers around the world, we all spend the same way, right? Like we are using a financial instrument to buy things or goods or services. We're transmitting value between one person and another or business. And so the enabling technology has changed, but that doesn't necessarily mean that everything has to change as well, right? And so like a lot of our clients, they come to us and say, hey, I have an existing program or I want to build a product where it lets my customers hold dollars and spend dollars. And how do I do that? And so we can connect into any type of custodial or non-custodial wallet. A lot of our customers use portal products or other products where wallet agnostic, but being able to connect into the Visa network globally is a sign of trust, is being able to say, hey, I can actually use the money that's in here. I'm not having to come back in or out through the same partner that I'm working with. And stablecoins in a fintech use case that we're powering, for example, is essentially providing a immediate access to like an open banking type infrastructure, right? Because the money that you have is now instantly interoperable with any other app that also supports USDC or USDT or USDG or any of the other tokens we support. And so you can actually, if you lose trust in that partner or that user experience is bad, you can actually withdraw the money and send that over to a different payment app directly, potentially. You might be able to even take your wallet that's plugged into customer app A and plug the wallet into customer app B, keep your tokens in there the whole time. Like there's a lot of different use cases that are emerging where, regulatorily and society wise, like we've tried to solve a lot of these individual problems in different ways. And stablecoins are this like new format of capital, and you can use it the same way that you would use normal money, but it's a lot more flexible and interoperable than a bank deposit in a prepaid card program, right? And so like there's a lot of different types of programs that you can build. The last generation of financial products for stablecoins was really built on the veneer of stablecoins, where it was really just every time you loaded value, it would go off chain, it would get burned into a fiat balance, it would be loaded into an omnibus account at a bank, and you generally lost access to any type of auditability because omnibus balance are kind of held on the balance sheet of the issuer. And that's what it was. It wasn't really, if you wanted to withdraw, you really couldn't. Even today, if you want to withdraw for like any of these prepaid programs, it's kind of difficult to do. And the balance is just, it's kind of an ethereal balance, which is relying on a intermediary financial institution. Whereas with all the products that we support, we don't issue the tokens, right? So you can bring whatever token we support, and we support all of the major tokens that are issued by credible financial institutions on the stablecoin side today. And we expect that to continue increasing, right? So as that increases, we can provide utility to every new token that comes in the door. Like the state of Wyoming launched the Frontier token a few weeks ago. And on day one, you could spend that Frontier token globally anywhere Visa's accepted. And so we've eliminated that initial problem of any new stablecoin where you'd have to figure out, okay, where can I trade for this? Where can I redeem this? Where can I swap this?
Hmm.
Where can I use this?
Yeah.
Who's going to accept this? And so now you don't have to worry about any of that because we've abstracted that away for the consumer, right? So, like I always say, if you look at coins in your pocket, each one of those coins is issued or has been minted by a different US mint,
Hmm.
but they all spend the same. And so, does it really matter that Denver has a better mint than San Francisco does? It really doesn't matter, right? As long as you as a consumer can go and buy whatever you want, and you're not having to be forced with, I'm on USDC and base, and my merchant only accepts USDT on Tron. Like that's just not something that you as a consumer really should have to think about.
Yeah.
That's really everything that, I mean, everything we built has been built so that we handle all of that. Nobody really has to figure that out.
That is a really interesting point, I think, to make. There's a lot of stablecoin issuers, chains, right? There's so much interoperability friction that potentially could occur if not handled properly. And I think one thing you mentioned there that I know people are thinking about, but here's a really elegant solution is don't worry about what stablecoin, don't worry about what chain. As long as I can get it in my account, I can spend it at all these different merchants. And so I think there's going to be lots of different areas of infrastructure. Maybe that's at the settlement layer, the clearing layer, the card spend layer, and others where they manage the complexity of this interoperability. Maybe that's where some value will accrue also. But the end goal for the user is I don't want to worry about all these different things. I just want to spend my dollar. And I think that's a really important point.
I think one thing I'll just call out, I mean, that's interesting about Rain here is that you guys, a lot of traditional fintech folks are familiar with a lot of the banking as a service stack or the card issuing stack. I think what's unique of what you said, Farooq, about stablecoins being composable and programmable and even global and borderless in nature is that what traditional card issuers like maybe think of Marqeta that's doing just in the US or Pomelo just doing in LATAM, like you're doing across many different markets. And you guys have been able to scale pretty globally also. And so the reach that you guys have leveraging new type of infrastructure with stablecoins actually makes you guys a lot bigger than a lot of the card issuing partners that actually existed historically, but also allows you guys to expand into like more use cases also. I guess like break down just like how you think about, customers coming over to you guys, but also like maybe let's go into like a few specific and like your favorite use cases, right? That has emerged from like this borderless nature of what Rain has really been able to build for the last many years now.
Yeah, one of the biggest things that we realized right when we started building Rain was that there's so many global platforms, so many global marketplaces, and so many global businesses out there. Right? You look at Airbnb, you look at Deal, you look at even Rippling, or a lot of these different platforms that have customers from all over the world, Fiverr, Upwork, TopTal, etc. And the challenge has been that there's global businesses, but there's no global partner. And so that's really what we started building Rain to take advantage of, which was there's an opening in the market where global businesses want a global partner. Global partners have not traditionally existed. You've had to go country by country and negotiate individual partnerships. And so we just realized, hey, stablecoins are global money. Visa and MasterCard global networks. Why don't we just build a global partner? And so that's what we've been really focusing on. And that's been, a big key to our growth where, we can go to a global player and say, hey, with one integration, you can service a global customer base. And we can do that with global dollars, which are universally acceptable. They're self-custodial. They're instantly transferable. There's open markets where users can redeem for them or from them into local currency. And we're able to take advantage of a lot of the underlying infrastructure that has already been built by a lot of other players where, there's P2P exchanges, there's regulated exchanges, there's lots of different markets where people can come in and out. For us, like that was a big part of, hey, saying we have the aptitude and the technology and the infrastructure and the time is right to be able to build a global partner for all these global businesses. And those are the most interesting use cases that we are powering today, right? So we have remittances companies that use us. We have global broker dealer programs where it's not even stable coins or crypto, really. It's just powered by our settlement stack and our global footprint on the issuing side, where we're able to onboard customers and face them directly without having to worry about, our partner having to go into each country and get licensed themselves. So there's the utility that we provide, which is an element of the global element of stablecoins, but also it's a big part of we're spending the time and energy to get local licensing. We're spending the time and energy and connect it all to a single settlement layer. And we're connecting all of the different blockchains that users support. So, in some countries, Avalanche is the number one blockchain, in other countries, Solana is, in other countries, Tron is. And so for us, our thinking has been that, like, look, ultimately, there may be 1,000 blockchains that everybody wants to use, but ultimately, like, consumers shouldn't have to deal with the complexity of what that means.
Yeah, no, it makes total sense fully abstracting everything away. And I think what that does is that it allows you guys to then serve a lot of different corridors, a lot of different backgrounds, countries. I guess like maybe walk me through like a use case that you're surprised by that you didn't really expect like folks to like come to Rain to use. And you kind of mentioned a few interesting ones right away, but any use case or company or project that you're like, hey, I didn't expect that, but it's really cool that you guys are able to serve them as being that global partner too.
One of the things we didn't expect is that very large registered investment advisors or broker dealer platforms would want to service a global customer base with us, right? Like we're working with somebody today where they're the broker dealer for like a network of global registered investment advisors, and they're a custodian for stocks and bonds domestically in the US. They face an international customer. They're holding funds for international customers. And we're providing them a credit card based on the value of their assets that are held in institutional custody. What's really interesting there is that we're actually borrowing the money in stablecoins from our capital partners on the blockchain, right? And then we are lending that money out using stablecoins to international users around the world. But the collateral for that loan is actually held onshore in the US at a regulated custodian in the United States. And that is a true credit card product where it's not a charge card, it's not a secured card, it's not an overnight card, it's a real revolving credit card. And so there's a lot of these types of use cases where the stablecoin element is included in the back end. The fact that we're international, we're comfortable with servicing an international customer base is a big part of why we're able to work with them on this. And then the use case is totally traditional. And this player could use anyone. Like they could go to anyone and everybody should fall over themselves to service them. But they're choosing us because we have the solution that could get them to market the fastest. It's the most broadly available globally, and it's the most flexible from a credit perspective. And so it's, a use case which is very difficult to have thought about in advance, but it's something that we're always surprised about today. And similarly, like, we have our earned wage access card in the domestic market that we support. We have other programs that are emerging like fleet spending and things like that, where a lot of people are just, they want 7-day money, right? They want to be able to earn yield from partnering with stablecoin issuers on like the reward side. And so they want to be able to access a more flexible type of program structure that doesn't exist today. Like they just can't do that, right? Like we're talking with another player where they want to work with stablecoins because right now their program has balances that are far in excess of the total capitalization of the bank. And so they're being put into an overnight intra-fi pool, whatever it is, but they're just like, I would much rather make sure that this is one-to-one backed with institutional custodians held in US Treasury bills and overnight repos and things like that. And I don't necessarily want to take the risk of leaving all my clients' money at a $2 billion financial institution if I can help it, right? And so like, there's a lot of these things where people have been thinking about how do we reduce some of the risk in our existing programs? And we're always humbled and honored when they come to us and say, hey, is this something that we could potentially work with Rain on and we can move some of our assets to a stablecoin issuer? And then we're in a slightly better risk profile setup than we currently are today, right? And we're able to do a little bit more because Rain's able to do a little bit more than our existing solution. So we're seeing all sorts of different stuff coming our way.
I find it fascinating because the use case is a traditional use case. The customer is not a crypto or stablecoin or blockchain native customer. They have a job to be done and they want to, sounds like credit cards where the credit collateral or really what's enabling the credit to be provisioned is the assets that are in the RIA account, which completely makes sense. And they've got lots of different traditional fintech providers who can do that. But you win because you have a broader coverage. And so there's one of the many use cases of stablecoins that are emerging. One of them is being able to go global on day one. And in your case, it's just being global and having that global coverage. But now you're winning traditional deals. And I think that's just something that if you're not close to the space, you may not necessarily see. It's like, is it payments? Is it a new payment rail? Is it faster, cheaper? It's more competitive financial services. This is the end game here. And I think this is a great example of, hey, we won a traditional client. We were better. We were literally the best. That's why we won. Not because of faster, cheaper. It's because, well, actually those embedded benefits improve the efficiency of your business and you actually have a better product overall. So I think that's super interesting.
One thing that I'll quickly add is that I think this is like a really good example where a lot of folks talk about product market fit, but not enough folks talk about product pool or like market pool. And I feel like this is like an excellent example where, Rain, you guys started off with like an insight of like, how do you connect, these two worlds together? And as a byproduct of that being at that intersection, you're now getting pulled into different use cases that you never imagined before as well. But you're still able to unlock the efficiency, the liquidity, or like the global nature of it as well. So I think this is like, in my opinion, like Rain is like a really good example of product market fit, but actually the prerequisite was actually the market pull and then building out the product to then even like accelerate that pull even further as well. So that's awesome to see.
Well, we've been very fortunate to be in a position where we can take advantage of a lot of the changes that are happening, a lot of the regulatory clarity that's coming in. And then also, we're building a global business. And one of the use cases for crypto or digital money or stable coins is like treasury management, this like ephemeral use case of this magical customer that has treasury management needs globally. But the reality is we are that, right? Because we have local licenses in global markets, we can move our cash around everywhere at the speed of the internet. And we can actually be a lot more efficient than anybody else in the market because we're not having to pre-position capital around the world. We can actually pre-position capital at the moment of the transaction taking place, which is something that no one else that is in our category can really do.
Right. And speaking of that expansion, congratulations, first of all, on the Series B, 58 million Series B led by Sapphire Ventures, with participation from existing and new investors, including heavy hitters such as Dragonfly and so on. I guess that is, to Raj's point, this market pull where you have this infrastructure, you started to serve some initial use cases, saw some traction. Obviously the entire market is growing really well, but you're very well positioned. And I see that the expansion here is way beyond cards, right? We've built this multi-jurisdictional regulated platform. How do you see these enterprises starting to like look at Rain now differently? And what do they come to you for now? Is it kind of on-off ramps here? Or is it, as you mentioned, hey, I just want cards, but global in more places than just one particular location? What are they particularly starting with?
Enterprises want to work with partners that they can rely on and grow with, right? Like they have a variety of different use cases. They want to work with somebody where they can say, I want to start with this use case, and then I want to expand to these two use cases if the initial use case bears out. And so that's really what we've been seeing in the market, and that's what we've been optimizing for, right? How do we become the partner? How do we grow into more pieces that our customers already asked us for? And more importantly, like grow into the pieces that our customers are paying, like for standalone services where the economics really don't make any sense, right? Like for them. And so there's a lot of pieces of this where, on and off ramping, a lot of this stuff was created at a time when the industry was, outside of the regulatory scope. And so prices for these products are set up in a way where it doesn't actually take into consideration the fact that we're now moving into more of a regulatory clear market. And so like this isn't like high risk flow as much anymore if you are in specific market segments, right? And so for us, a lot of this has been about how do we expand the services to our existing client base where they want to be able to get money in to a self-custodial wallet that's powered by Rain infrastructure. They want to be able to get that money out into a local payout because that user may want that money back to pay their rent in a local market in Brazil or Argentina, or they want to be able to send that money to another person in that ecosystem, right? And so providing that type of infrastructure to allow programs to actually not only augment what they do with us, but also work with all of the other customers that we power is a big part of how we're looking to grow our footprint over the next year and a half.
And it makes sense, right? Many folks know Rain just for cards. Cards are never standalone. You never just want a card, right? It's not a product in and of itself. It's usually part of something. And if that's a consumer, it could be a consumer neobank, a consumer wallet. If it's business, it could be business expenses. If you have a wedge into a customer, the cards could be the first product, or it could be the second, the third, the fourth. And therefore, there's usually other things that those customers want to do. And you're like, hey, by the way, you like our service for XYZ. We're in all these different jurisdictions. Hey, that consumer wallet that you have, you probably also want on and off ramping. We can do that as well. So it makes sense. And I think it goes to kind of that market pull and that being that regulated and like trustworthy provider that you mentioned. But before we move on, we just want to take a quick moment to hear from our sponsors that make MoneyCode possible. Every business needs a stablecoin strategy. And if you're looking for the best place to start, that's BVNK. BVNK is the world's leading provider of stablecoin payments infrastructure, helping businesses move money faster, reach new markets, and even launch their own stablecoin products. Global licensing and compliance are covered, so you can build with confidence. Learn more at bvnk.com. Thinking through this new space, right? We are at the intersection, I think people call it the convergence of traditional finance and blockchain. And I genuinely think this is one of the most exciting places to be in fintech. I've seen a lot of crypto Twitter chatter. I call it stablecoin Twitter now, depending on what part of it you're in. It's fintech. It's just fintech. There just so happens to be this other technology that's good at certain things. And if you want to solve certain problems with it, then use that technology. Like that's how I see it. But it's new, right? And there's not that much infrastructure out there. You are part of the infrastructure that people are using to build these products. So given that you are part of what other people are using, again, how have you gone through like stitching everything together? Has there been enough for you to build on? How much have you had to build yourself? Can you talk through what that experience has been like?
Most of what we've built has been built ourselves from scratch, right? We started off focusing on a very narrow use case, which was payment infrastructure tied to card programs and card payment networks. And then we've expanded from there. So like we've added additional capabilities on like the credit side. We've added more cross-chain capabilities, cross-chain settlement, all of that stuff, authorizations, pending transactions. So everything that we designed was specifically made with the idea that like what happens post regulatory clarity, right? Like everything we've been building has been indexed on being the market leader the day after regulatory clarity comes in. And that's been the unifying kind of vision that we've had, which is let's build as much as possible. Let's make sure that we're using it and stress testing it and growing it with real money so that we have a track record that we can point to as a solution that works and has been tested, has been audited, has been built from first principles, has been built to be core financial infrastructure rather than a hobbyist project for stablecoin payments only. And so everything that we've done here has been, coming from looking at this market and opportunity from a institutional lens. Like both Charles and I have spent, our careers sort of working at large enterprise. And so everything that we are focusing on here is really about as larger institutions, financial institutions, market leaders in other categories start exploring this ecosystem, how can we be a trusted kind of partner so that we can help you understand, hey, these are the pitfalls. These are the things to watch out for. These are where we've seen other people make mistakes. And this is where, if you're building something new, totally fine. The world is a very big place and there's going to be a lot of opportunity to build something new. But these are the things that you should be thinking about that we've learned from having moved, millions of people's money over several years. And these are the advantages that you can actually take from us because we've been here longer. I mean, even as we've been building, a lot of things have changed, right? Like we have been building since like before Ethereum moved to a proof of stake model. Like it was still proof of work. It was a very expensive chain. Now it's significantly more cost effective. We've been doing this since before L2s became a real thing. And so like we've been here at every step of the growth of various different pieces of the technology infrastructure and technology stack. And so we've been able to actually evolve our thinking and evolve our product stack to take advantage of all the technology innovations that have come, even in this like short 3 to 4 year period. And we've really always thought about this as, hey, individually and over time, there's going to be lots of different changes that will come in and new technology improvements that will come in. We're starting to see this now with a variety of new L1s being launched by incumbents to get access to their distribution. And for us, like we're observing it, we're thinking about it. The reality is that, even today as a consumer, there's a core advantage and disadvantage versus closed loop. When I look at closed loop apps on my phone, like Square Cash App or a Venmo. And then when I look at an open loop payment system similar to Zelle, it's like there's different utility for various different things. And there's room in the market to have closed loop payment systems like a L1 run by a single company, or having a more open loop, more egalitarian ecosystem that everybody can engage with, right? So there's a lot of room in the market to see various different things win out. But a big piece of what we've been building is that it doesn't matter. Like, consumers will vote with their wallets, and that's where Rain comes in. Like, everybody will either have to get connected back into something else, or things will need to work between one solution and another solution, and that's where we come in.
I mean, one of the things that's pretty interesting to what your point is that, I mean, you guys have had to build the hard things. And like, I think in addition to some of those hard things is the infrastructure that like the changing landscape of the blockchain space, but also like you guys have been a Visa principal member for a very long time too. And that's a really hard thing to get. I can speak for it just because of my years at Visa. It's not easy to do. You talked about like the original narrow use case that you guys focused on, right? I mean, what does that Visa transaction look like with Rain and stablecoins? I mean, a lot of folks are familiar with some of these, cards before where you kind of change your, convert your crypto, but you guys do it pretty differently. And then on top of that, there's, I think, new unlocks that you guys have been able to do both for the network, but for your customers also. But maybe just like break down like just how that transaction actually works today.
Yeah, we can support a variety of different type of transactions, but like, I guess for the ease of this conversation, we can talk about like debit. So for a debit transaction, there's a wallet, like a smart account on the blockchain. We've deployed that natively on all the different blockchains we support. I think it's 11 at recent count. And you can have tokens in all 11 chains. It doesn't matter. You can have it on one. The user doesn't necessarily need gas on each individual chain for it to work. We can authorize, like, you swipe a card, we can authorize that transaction on the blockchain within the card SLA, which is usually, less than a second. We can do that, I think, at around 400 milliseconds on most of the chains we support. And then we've built this whole infrastructure to be highly performant, but also to be able to have the concept of like a pending transaction on the blockchain. So if you spend $5, you have 10, you can withdraw 5 and that'll go through permissionlessly. If you try to withdraw 10, it'll fail on the blockchain. And then similarly, like now, whenever that settlement report comes in from the card network, we can actually pull those tokens out of your account and send them directly to the card network. So we don't off ramp at all for most of the programs that we support. I mean, the only programs that are fiat based are the fiat based programs that our customers want to do. But we settle payment volume 7 days a week with Visa today. And we do that with USDC. We can also do that with USDG. We can do that on 4 different blockchains directly from the user balances straight to the payment hour. And then what's interesting is we have some clients which are on the other side, and they're receiving merchant settlement from Visa and stablecoins as well. That flows into Rain powered accounts as well. And so as soon as that hits the merchant account, they can spend that money on a card immediately. There's no settlement delay. There's no, hey, you're going to get this money in 2 days, or click this button for a 1% fee to get the money instantly. It's just all internet money, and it comes in immediately. You can spend that money, it goes back out to Visa and a stablecoin. And so that's how it works today. It's a 24/7, 365 technology system that we've built, and it works every single day. And we're the only player domestically that, as far as I know, still settling 7 days a week with the payment hours.
So, and that's definitely a brand new unlock. Another one I should have added. I should probably just create a list for folks who are skeptical of, like, here are things that are happening in the world with stablecoins that are not speculation. 7 days a week settlement with card programs is net new. It's a new thing. And so that's a really exciting one. But one of the things you mentioned, which, not to stir the pot here a little bit, but one of the things you mentioned was, okay, you've got issuers on one hand, i.e. folks who are spending. Then you also have some merchants who have Rain accounts. Wait a second. Okay, so then Visa's in the middle, and obviously we're very early, but there's this whole question that many people ask about, stablecoins are going to disrupt Visa and MasterCard. And I think on the call we have someone from ex-Visa here in Raj, and principal member of Visa here in Farooq. So I guess I'll have to play the steel man of the other side. But can we talk about that? Like, are stablecoins going to disrupt the card networks? And if so, how?
I guess just a quick, I've been at Visa for 7 years or so early on. And the common adage at Visa was there's a lot of disruption fatigue. Visa's been around for 60 years, 60 plus years now at this point. And every time there was a new network or a new, competitor that come up, they would effectively fade away after a while. I think for the first time, like I've seen, stable coins and blockchains, actually that combination being a real competitor for Visa in some capacity. And we kind of alluded to like having the merchant acquire and the issuing, the issuer start to settle on stablecoins directly. But maybe Farooq, like I'm curious to get your point of view because you're building these systems at scale. You're seeing both sides also. Like, is the disruption fatigue actually something that Visa needs to take out and like start to take the space a little bit more seriously? Like, curious to get your feedback on it.
We've seen them take it very seriously, right? Like our engagement with the Visa team has been a great relationship. We know that they're thinking about stable coins and how they play with their existing systems, how they can use stable coins as a way to improve the client experience for issuers as well as acquirers. So like we've been having really productive conversations with the Visa team about how stable coins are a tool to help Visa grow faster, improve margins, reduce costs. So like I think that there's a universe in which obviously like anytime there's a technology shift and enabling technology changes, there's always going to be a risk to incumbent networks or incumbent kind of participants. What I think is going to be interesting to see is really, how all of this stuff evolves over time. And you can see, I mean, a lot of different players that Visa and MasterCard both work with are announcing competing networks, right? Or trying to announce competing networks while saying that it's not really a competing network. And so it's going to be interesting to see, how that all evolves. I think payments has been an industry where everybody's kind of a frenemy a little bit. It's been interesting for me to kind of learn more about. But overall, I think, Visa and MasterCard, and Visa especially, has had a long time to build a global distribution network for merchant acceptance. And I think that that's something that's hard to duplicate, right? Being able to go country by country to block and tackle each individual merchant is a difficult endeavor. And I think that there's significant and strong network effects for having a global merchant acceptance network. I think stablecoins have an opportunity to kind of disrupt some of that. And there's a lot of people trying to figure out how to get merchants to accept stablecoins. I don't think that that's going to be sort of a big issue. It's really going to be how are people actually going to start in stablecoins in the first place, right? Our thesis has always been, let us build solutions that get people into stables that wouldn't otherwise be. And then we can figure out what happens. I mean, we're lucky we settle 7 days a week today. If the networks wanted us to settle 24 hours a day, we could probably do that too. I mean, we definitely could do that. And if they wanted us to settle in a variety of different tokens for a variety of different transactions, that's already something that we support today. So for us, it's having networks that are thinking about this market as a risk, but also as an opportunity has been really helpful because it's helped us engage with them productively and actually, build these technology solutions. And if tomorrow there's a new network that comes up that hopes to disintermediate or sort of stand alongside, I think that, it should probably be good for consumers to have lots of other choices, right? But at the same time, I'm not convinced that a 50-year head start in kind of merchant acquiring, it can be kind of short-circuited.
Yeah, I mean, I know I said I was going to steal, man. I don't think I have time right now, but we'd love to get into this another time for anybody else who's listening. But the way I think about Visa and the network that has been built, it's taken decades for a reason. It's a very, very challenging thing to do. And I think there's two things you mentioned there that we should discuss quickly here. But there's more than just connecting merchants and issuers that Visa does, or I should say the card networks. And I think authorization and guaranteed funds, okay, cool. If you have instant settlement, then technically you're basically authorizing and guaranteeing the funds instantly. So that's the part that most people realize and say, wait, we can disrupt this thing. But there's other parts that Visa, MasterCard do and the card networks do, which is this kind of governance layer and dispute resolution and chargeback risk, this whole liability shift, where if you are ordering something online and it doesn't arrive or it doesn't arrive at how you think, there's a mechanism, probably less needed if you're buying a coffee in a shop, but for online payments and digital payments, you need this mechanism, this agreed form of approach for how you deal with these things. And, depending on the regulation, the customer gets the money back first, then the merchant has to go find the resolution to, hey, this person has asked for this money back. And there's a process in it and people follow it. And that's really challenging to do at scale. But there are folks who are trying to do this in an open way. I think for folks listening, Coinbase Commerce Protocol is one to watch out for. It's like, hey, let's break down each of these roles, make them into smart contracts, and let folks like Visa or anyone else play those roles. And it can unlock some really interesting things, but we're still very early. And the other thing you said that is really important for folks to know is it's hard to get all these disparate parties to work together. And the incentive mechanism is interchange. You say, hey, we're going to take some fee out of the pie, and then we're going to give it to the people in the network to grow the network. And when I started learning about payments, I was fascinated by these ISOs, which are essentially firms that get a cut by going and acquiring merchants and giving them to the merchant acquirer, and then you take a fee. And that's just one example of multiple fees and cuts that get paid to encourage and incentivize lots of different people to go and build and go and acquire merchants and so on. And so there needs to be, there can be equivalents in the stablecoin world of who can be incentivized to get merchant acquirers to accept stablecoins. But how do you get everyone to agree on the same dispute resolution system? There's probably pathways to do that, but it's a complicated multi-party coordination problem. So that's one thing that I'm excited to see if it plays out. But we are at time. So as we close out the show, there's just one thing we want to do. I'm going to hit you with some closing questions here, Farooq. You ready?
Let's do it.
Okay, so if we project out 5 years from now, what does success look like for Rain?
It looks like a lot more people trust us to support them as they build more products and services. I mean, that's our aspiration, that anybody that wants to build anything interesting in this ecosystem, consider us as a partner.
Lots of different people are in the space, but lots of folks are building things new, like you were mentioning. There's only so many folks who are kind of in the media or on, busy on LinkedIn and X and so on. So who else should we bring on the show?
Well, I think two of the smartest people in the industry are already on this show. And
Too
that's
kind.
you too. So,
Appreciate it. I appreciate it.
So I trust that you guys will be very good at finding the next group of folks. Look, I think that there's a lot of folks I admire, and I think you had Simon on, right? Like, I think Simon is a phenomenal person. I think you should probably bring on some of the folks from Raj's former employer at Visa, Kai. I think Kai has a lot of really interesting opinions about Visa's role and what stablecoins will ultimately either drive as an opportunity or a threat. And I think that you'd be a great guy to have you bring on.
Gotta shoot Kai a message. We'll make it happen.
We can have a rerun of that Visa debate. Okay, cool. So that's a wrap. Thanks for a great conversation. Where can listeners go to learn more about you and your company, Farooq?
Yeah, Rain is at rain.xyz. I'm at Rookster on Twitter. Please feel free to message me if you have any questions about what we do, and happy to answer.
And you, Raj?
You can find me at mana.xyz and then Parekh _ on X. Thanks again for coming on.
And you can find me at stablecoinblueprint.com or Chuk Okpalugo on LinkedIn or Chuk_XYZ on X. It's been great having you, Farooq. Thanks so much for coming on.
Thank you so much.
Thanks so much for listening to Money Code. There was so much to take away from today's conversation. I learned a lot, and I hope you did too.
If you enjoyed this episode, do us a favor, share it with someone you know, or give us a 5-star rating on Apple, Spotify, or wherever you get your podcast from. Until next time.